So we've been calling this period a mini cycle, basically a reset following the pandemic-induced volatility in supply and demand, rather than a full cycle that typically coincides with an economic recession. So I'm really zeroing in on the US here. And we see the mini cycle troughing in 2025.
Hello and welcome to the REIT Report. I'm your host, Sarah Borgson-Keto. In today's episode, we're taking an up-close look at global logistics real estate fundamentals and structural industry trends with my guest, Melinda McLaughlin, Global Head of Research at Prologis. Melinda, thanks for joining the podcast today.
Thank you for having me.
So, Melinda, to start with, on balance, what sort of year could 2025 prove to be for global logistics activity? And do you foresee any slowdown in global trade?
2025, I would describe as we foresee a year of action, right? There's been, in the last couple of years, a slowdown in activity, decision-making, I would say in particular for longer-term leases. It's been a defensive posture on inventories. They're actually leaner today than they were before the pandemic. And a lot of that just had to do with all of the volatility in key economic drivers like interest rates that certainly impact consumers. Consumers are course, the foundation of logistics activity. And as we look ahead, we do see certainty increasing. So the path of inflation and interest rates becoming a bit clearer. The election outcome certainly was a binary event where there's now a bit more clarity, although details are still coming into view. So if you start to look at the foundation of just big picture, a lot of uncertainty in 23, 24, getting a bit more predictable in 2025, although I'll put an asterisk on the trade policy because it's certainly fluid. And so if you take that to global trade, we see a solid year of global trade that's really built on the consumer outlook around the world that benefits from really strong labor markets. So whether it's the US or Europe, we see unemployment remaining low, job creation remaining positive, and increasing investment in some key areas of the economy, including nearshoring in Mexico, manufacturing in US and Europe for certain industries. And, if I back up even more into the consensus outlook, there is a growth rotation. So some of the lagging economies are seeing momentum increase a little bit. I think there's a lot that remains to be seen, but ultimately we see 2025 as a solid year for both consumption and global trade.
And in your outlook for 2025, you state that vacancy rates will fall the fastest for the largest buildings in the US and Europe. Why is that? And is it a particularly hopeful sign for the broader logistics market?
Yeah, so I think you're referring to the predictions paper, which I'll be honest, we always try to pick out the predictions that we believe in, but are not necessarily the most vanilla. So know that we're always trying to find kind of bolder ideas in there. Now, for bulk buildings, which are the largest, I think the story is pretty clear. First, in any sort of an acceleration in decision-making in the logistics real estate, it tends to be the companies with the deepest pockets, the most resources that act first as the market turns, right? They want to take advantage of higher availabilities, more attractive rental rates. And that type of activity does tend to be located in the larger buildings. We've also seen positive demand in this segment through 2024 amid a flight to quality, although toward the end of the year, we did see a lot of diversification. And finally, and I think maybe the most important point, or at least the one we have the most confidence in, there's been a lack of construction in the largest buildings since 2022. Around 2022, the profile of new logistics real estate starts really shifted toward mid-sized product. That means today, and looking at 2025 as a whole, we see deliveries down 35% year over year for all types of logistics real estate, but that number is a 65% decline for bulk buildings. So really setting the stage for demand and supply to rebalance and maybe even have some scarcity in certain markets.
And turning to global e-commerce trends, what are you expecting in terms of that, and what impact could it have on logistics demand?
Yeah, e-com has been obviously a story for a long time. We were pretty vocal about this, I would say, during the pandemic, where we saw the surge. Prologis Research's view was, yes, as the world opened up, we're going to give back some of that market share. However, it was going to remain higher than the trajectory was before the pandemic, and then it's going to grow again. And we're in that grow again stage. E-commerce is absolutely gaining market share in all of our markets around the world. And if you add them up, it really increased about 100 basis points year over year globally. So that's just the share of sales that happened online versus in store. There is faster growth in some of our lagging global markets like continental Europe and Brazil. So again, we're seeing some really positive signs there. Delivery timelines for e-commerce are again shrinking. Delivery was not a huge priority during the pandemic. I think everyone was well aware of supply chain disruptions, very accommodating. I'll wait 5 to 7 days for my goods. We're certainly seeing that reverse, especially I would say here in the US, where delivery timelines again need to be 2 days, maybe faster, same day. And that has a lot of implications for location strategy. You really need to be close to end consumers to facilitate that. And that obviously drives retail sales growth. If I know I can get a particular good to my doorstep later today, more likely I'm going to buy it online versus hop in the car and go to the store. That said, I would say there are new models out there. Low cost players like Shein and Temu, where sales have been growing at a really explosive pace. They're a small segment of the market, but capturing a good amount of growth. Today, that's added to demand for space near gateways. Delivery speed, not a huge focus on this model, right? It's really low cost. But we do see it adding to demand as they build out that domestic supply chain as well.
Are there certain global markets where you expect to see notable supply-demand imbalances for logistics?
So we called out Brazil in our predictions paper that I mentioned before. It's really a kind of outstanding story there. It's had the most notable decrease in vacancy and increase in rents globally. The story behind that is it's really a combination of entering the pandemic from a relatively weak economic spot. That meant there were limited developers in the market that could respond to the same strong demand that we saw around the world during the pandemic. And at the same time, robust consumption, continued growth of e-commerce that I already mentioned. E-com is about 3 times as space intensive as traditional retail. That's kept international players expanding into modern logistics space in Brazil. So really, Brazil's a bit of a standout right now. A year ago, I would have called out Mexico. Nearshoring is absolutely real and had boosted demand there up to 2 and 3x normal levels, even as we saw markets in the US and Europe slow down a bit on the demand side. And in Mexico, vacancies were at all-time lows in recent years. They still are really low, but uncertainty regarding the USMCA renegotiation has slowed decision-making in markets along the border, and there is a bit of new supply coming online. So we think that there's a good possibility that the market accelerates back into rapid growth mode once trade policy becomes clearer. But I would say Latin America has definitely been sort of a standout story around the globe.
And can you talk more broadly about what you're expecting regarding groundbreaking of new projects in 2025 and how state regulations in the US could factor into that?
Yeah, we're watching this space very closely. Groundbreakings, we see them reaching a cyclical low in 2025, which will be about 15% below normal levels when you tally up the globe. This is a result of shifting development economics, higher required returns because of higher interest rates, as well as a bit of softness in market rents, depending on the market, as well as those difficulties securing, entitling, and permitting new projects. That second part is really part of a long-term trend of rising barriers to supply for logistics real estate. So increased regulation, this can be what sites and configurations you can actually build, like in California. It can be sustainability requirements, like in Europe. But it's ultimately all adding up to limit the aggregate amount of new supply that can be started and therefore delivered at one time, right? That's going to add long-term premiums to existing logistics real estate buildings that don't need to go through this process, and also reduces the risk of oversupply throughout the cycle. So this is a big structural shift in logistics real estate where we've had, I would say, historically more responsiveness on the supply side. And as you see those barriers rise, more likelihood of that longer term growth profile associated with scarcity.
What about the prospect of a consolidation in the transportation sector in 2025? If that does occur, what would be the knock-on effect for logistics companies?
Yeah, so similar to logistics real estate, the transportation sector has been quite volatile during the pandemic, and we see, M&A really increasing. So bigger players taking advantage of the debt markets opening up and a bit more of that clarity we spoke about at the beginning. What does that mean for logistics real estate? Well, you start to digest what happens when companies get bigger. There are benefits to scale. I think two big ones are the ability to invest in technology, right? Get some productivity improvements, as well as pricing power. So transportation costs could go up as supply and demand rebalances. So we've seen in trucking, for example, rates have remained pretty low through the past couple of years. Most other reporters would call it a freight recession. And that's really started to erode as the supply of trucks basically has started to come down and rebalance in response to normalizing market conditions. So if you take the combination of more technology in the operations and perhaps higher transportation costs, that's going to benefit your high quality logistics real estate. So transportation operators are going to match their real estate needs with the needs of their future supply chains. That means you're going to need the power, physical features, and locations that are going to be in demand as the leading firms grow. So we really see it as a tale of a continued flight to quality.
And Melinda, based on your latest research, where does Prologis expect rents and vacancy rates to trend within the broader market this year?
So we've been calling this period a mini cycle, basically a reset following the pandemic-induced volatility in supply and demand, rather than a full cycle that typically coincides with an economic recession. So I'm really zeroing in on the US here. And we see the mini cycle troughing in 2025. Vacancies are going to peak at a relatively low level as new supply falls sharply. That's going to lay the foundation for future rent growth as segments of the market begin to run out of available space and replacement costs remain about 15% higher than market rents. So you really need to see that gap close before developers are broadly incentivized to bring on new supply. And we'll start to see kind of things click back into place in 2025 and set the stage for a longer recovery ahead.
Melinda, you've covered lots of different topics, but anything else that you think we should know about right now?
One other maybe leading or underappreciated trend is that there's more competition for industrial land today than there used to be. And that's both making it harder to source land for logistics buildings and it's driving up costs. So what am I talking about? Competitive uses could include manufacturing facilities in some markets, as well as data centers more broadly. And so if I really back up a couple steps long term, I think all these trends are going to add up to real outperformance for premium locations and premium buildings, giving that value to their users as they adapt their operations, as well as being really irreplaceable. A brighter outlook ahead as you add up all of these longer, more structural trends as we exit the mini cycle.
Melinda, thank you so much for your time today.
Thank you for having me.
And to our listeners, if you enjoyed this episode of the REIT Report, please subscribe or leave a review on your favorite podcast platform.